Welcome back to the Finance Hub UK. In one of the most unexpected financial updates of 2025, HMRC has confirmed a new 300 deduction affecting thousands of UK pensioners. Across Britain, retirees are waking up to find that a portion of their pension income is being withheld, and many don't even know why. This sudden move, described by insiders as a compliance measure, has sparked confusion and frustration among pensioners who rely on their full payments to manage daily expenses. But what exactly caused this? Why £300? And how can you stop it from happening to you? HMRC introduces a £300 pension deduction from October 2025. Applies mainly to pensioners with certain overpayments or tax adjustments. Why the sudden deduction is happening and who it affects. Immediate action required to avoid permanent loss. The origin of the £300 deduction. This deduction didn't appear overnight. It stemmed from an internal HMRC review, launched earlier in 2025 to recover tax discrepancies from the previous financial year. During this review, officials found thousands of pensioners had inadvertently been overpaid or misclassified due to system errors and outdated tax codes. Rather than waiting for the next tax cycle, HMRC decided to make direct deductions to correct the balance, starting with £300 per affected claimant. Unfortunately, this approach has led to panic and misunderstanding, especially for pensioners unaware of any prior issues. HMRC internal audit identifies tax miscalculations, overpayments traced to old pension systems, and incorrect tax bands. 300 chosen as a standard recovery figure. Who exactly is affected by this change? Not all pensioners will experience the deduction. The affected group includes individuals whose records show duplicate, which pensioners will see the £300 taken from their payments, overclaims, or tax underpayments between 2022 and 2024. This typically includes those who receive both state pension and private or occupational pensions, have recently adjusted tax codes or untaxed interest earnings, or receive DWP benefits alongside taxable pension income. HMRC is cross-referencing multiple databases, including DWP and pay systems, meaning more pensioners could be identified in the coming months. If your tax records are even slightly inconsistent, your name might already be flagged. Dual income pensioners most at risk. DWP data linked with HMRC for automatic deductions. New compliance software identifies under report-ported income. Why October 2025 is a critical month. The date to remember is October 15th, 2025. This is when HMRC's new deduction mechanism officially activates. From that point onward, all corrections will be processed directly through bank accounts and pension payments. The official HMRC explanation and government statement. For pensioners, this means a £300 reduction could appear without advanced notice in your next payment cycle. The government has justified this date as part of a broader fiscal realignment, but the timing has left many struggling to prepare. Those who depend on fixed pensions to cover rent, energy bills, and food are now facing a real financial squeeze. HMRC automatic deductions begin October 15th. How to check if your pension account is impacted. Many will see smaller pension payments without warning. DWP advises pensioners to review their payment schedules immediately. HMRC's official explanation. When questioned, HMRC stated that this measure is not a penalty, but a routine correction. Their spokesperson explained that the £300 deduction reflects an overpaid amount previously issued in error, and recovery is part of their legal obligation under the Taxes Management Act. However, critics argue that many pensioners were never informed of the overpayment in the first place. The lack of transparency and limited communication has made this one of the most controversial financial corrections of the year. HMRC calls a deduction a compliance measure, not a fine. Pensioners demand clearer notification before deductions. Calls grow for government review of pension adjustment procedures. DWP's role in system coordination. What steps you can take before the deadline. The Department for Work and Pensions, DWP, has confirmed it is working closely with HMRC to implement these deductions. This collaboration ensures deductions are made only after cross-verification with pension payment data. However, this also means that pensioners receiving both state pension and benefits such as pension credit or attendance allowance could experience simultaneous deductions, amplifying the financial impact. The DWP insists safeguards are in place, but many advocacy groups argue that vulnerable pensioners are still at risk. DWP coordination intensifies for 2025. Dual claimants most likely to face multiple deductions. Advocacy groups push for suspension. Pending review. How to check if you're affected. Pensioners are advised to immediately review their October 2025 payment statements. If you notice a deduction, check your HMRC online account or contact a pension service helpline. You can also request AP 800 tax calculation notice to confirm whether you had any unpaid tax balance. It's important not to ignore any letters or emails from HMRC, even if they seem routine. Many pensioners overlook small notices that later turn into major deductions. DWP coordination with HMRC. What's changing behind scenes? Check bank and pension statements for unexplained £300 reductions. Log into your HMRC online account for official correspondence. Contact a helpline before making repayment arrangements. What you can do before the deadline. If you suspect you're affected, you still have time to act. Pensioners can submit an appeal or request a payment deferral before the deduction date. HMRC has stated that common mistakes to avoid when responding to the new rules. Those experiencing hardship can spread the recovery across several months instead of a lump sum deduction. Additionally, updating your tax code, confirming private pension income, and checking for DWP overlaps can all help. Correct your record before deductions. Begin. Appeal or request deferral before October 15th. Verify tax codes and pension income. Sources. Prevent automatic deductions by updating records early. Common mistakes pensioners must avoid. Many pensioners unknowingly make errors that lead to unnecessary deductions. The most common include ignoring correspondence, assuming letters are scams, or missing online updates. Remember, while scams are indeed frequent, official HMRC communications are clearly marked with secure.gov.uk domains. Always verify, but never ignore. Another frequent issue is double reporting of pension income or incorrect self-assessment entries. These small mistakes can lead to HMRC flagging your account for deduction. Don't ignore official HMRC or DWP letters. Verify authenticity before responding. Avoid duplicate or incorrect income declarations. What if you've already been deducted? If the deduction has already occurred, don't panic. Pensioners have the right to appeal within 30 days of the deduction appearing. Contact HMRC and request a formal repayment review. If it's found that your account was wrongly adjusted, you will receive a refund. For those who legitimately owe tax, repayment plans can still be arranged. Over time, the key is to act quickly and document every conversation for reference. You can appeal or dispute deductions within 30 days. Refunds are possible for misapplied. What to do if you've already had deduction adjustments. Always keep written proof of all HMRC Correspondence. Final message and what comes next? This £300 HMRC deduction marks a turning point in how pension income is managed. In the UK, it underscores the government's increasing focus on real-time tax reconciliation and digital oversight. For pensioners, the message is clear. Stay informed, check your payments regularly, and never assume everything is fine just because it was last month. As October approaches, the Finance Hub UK team will continue tracking every update from HMRC and DWP, so pensioners across Britain can stay ahead of policy shifts that directly affect their income. 300 deduction signals more real-time enforcement in 2025. Pensioners urged to monitor all government correspondence. More updates expected before year-end. Don't wait until your next payment disappears. Check your HMRC account today. Review your October pension payment details. If you're affected, contact HMRC immediately for clarification. Subscribe to Finance Hub UK for official, final advice and key reminders for all UK pensioners. DWP, HMRC, and state pension updates so you never miss another major change that could affect your income.